Well, as we know only too well, things can change, but right now the Reserve Bank thinks they've done enough. Today's minutes of the meeting a fortnight ago contain this statement, that the recent flow of data was consistent with inflation returning to target within a reasonable time frame, while the cash rate remained at its current level. So we're still treading the narrow path to controlling inflation without a recession. There was a little rattle of the sabre at the end of the minutes for form's sake, with the line that a further hike may be needed if inflation is more persistent than expected. But that's just a statement of the bleeding obvious. And here's why Australia's Reserve Bank has been able to control inflation with a lower cash rate than most other countries. Because while household debt here has come down a bit, it's still the highest. One reason inflation might prove persistent is oil, which seems to be inching towards $100 US a barrel. In fact, the CEO of oil giant Chevron predicted just that last night. Here's a graph of the crude oil price and the average Australian petrol price, and obviously it's a close match. Since the start of July, the crude oil price has gone up 34%, while the petrol price is up only half that, 17%. So maybe some way to go. The share market fell 0.4% with falls among retailers, banks and miners. Wall Street nudged higher last night, but Asian markets fell today, and the Australian dollar remained becalmed. And that's finance.